Everyone, you're welcome back to my YouTube channel. How are you doing today? Right, this is Olatimothy, as you all know, and you are studying from LPC. Okay, if you're a new subscriber, I would like you to click on the notification. Click on the subscribe button, click on the notification bell, and at the end of this video, if you really like this content I'm producing, then you can click on the like button. Thank you so much for following and thank you for supporting me. All right, I actually made up my mind, and I to give one individual, right, a token, right. So if you are going to be the winner, right, you're going to get the information of that particular giveaway at the end of this video. Okay, in today's class or in today's tutorial, what I really want to teach on is what I've been teaching and what we've actually discussed on so many, in so many videos. All right, and is on the concept of order blocks, right? And a disclaimer, I am not the one that invented order blocks, or I am not the one that actually gave that name order blocks. So it is not my word, it is a word of ICT. All credit goes to him. Despite the fact that I've said that I did not really learn from him, the first person I heard order blocks from is the person that taught me how to use order block, which is the person of Nardo, right? So you should know whatever things I'm going to teach today. If you're the type or an individual or a trader that you've already studied all the work of ICT and you've already see how we explain order blocks, which might really be different from what I'm actually doing, then pardon me, this is how I've actually understood it, because I've never listened to a teaching of ICT teaching on order blocks. So just pardon me, as I'm just teaching what I believe works for me and what I think as support and resistance. So I see all these zones as a zone for me to take trade. So I call them order blocks, or sometimes supply and demand, or support and resistance, right? Supply and demand, or support and resistance. So just follow me as I'm going to give you the rules that I look out for to spot and order blocks in the market, then also how I actually trade from them, right? What really influenced this video is actually because based on the fact that many students that I have, maybe people that actually learn from me on YouTube and even on my Telegram page or Instagram, they always have this particular frustration about the fact that their order blocks is not really holding anytime they put their rejection zone there, or maybe a box there, and they're waiting for price to really pull back, retrace back to that zone so that price can actually continue. They actually tend to see that zone being broken. So this is the reason why I really want to make this video. I've actually made a content on this before, so this is actually like a follow-up. So we're going to learn institutional order flow and also order blocks. So basically this is going to be episode 1 of this particular series on institutional order flow and order blocks. So I'm going to be giving you so much value on how you can actually trade it and actually understand it. All right, so let's get started. So what is an order blocks? And basically, based on my own understanding, just like what I said, I see them as supply and demand, and I also see them as support and resistance, where I can actually trade from when price actually trades back into it, where I can trade and take my lower time frame entry from. So basically, I have 4 rules, right, that is guiding my order blocks. So I'll tag that as rules of order blocks. Though some of the time these rules, I'm only looking for 2 out of these rules to be fulfilled for me to actually take that trade. So rules of OB, right? Number 1, right, is the fact that it took out liquidity. So we're going to, just like what I said, we're going to have a situation, a class whereby just like what I said, this particular class is going to be in a series. So this is episode 1. We're still going to have so much episode. So in each episode, I'm going to be showing you different dimensions of other blocks that you can actually trade. So it took out, right, liquidity. That's number 1, took out liquidity. Number 2, it has an impulsive move. Right, that break market structure, right, that BMS, impulsive move that break market structure. That's number 2. Then number 3, it engulfed, right? The candle that we're actually looking out for, or the block we are looking out for, engulfed, or what people might actually call as a FVG or imbalance in it. So not necessary, we might not really see these particular features at all time, but we're going to see when we should actually look out for the 4 rules. Then lastly, it rejects on a pseudo block. Right, it rejects on a pseudo block. So what is that pseudo block? A pseudo block is just a block that actually is also another blocks, but we are just using that particular zone as a point of reference to our other blocks. So anytime I see these rules in the market, then I am willing to actually take that. And you should know that we also have categories of other blocks. We have bullish order blocks and we have bearish order blocks. We have bullish order blocks, we have bearish order blocks. So what is bullish order block? Bullish order block is the last down candle, right, before the up move. Is the last down candle, or we can say it is the last bearish candle before a bullish run, right? So when that particular form is, when that particular block is formed, then we are expecting an impulsive move out of it. For example, this is the last, this particular black candle is that you are seeing here, right, is a bearish candle and is the last down candle before a bullish run. You can see this particular candle took out liquidity, number 1, right? It has an impulsive move, number 2, just like what I said, and this impulsive move took out market, it took out, it broke market structure. Number 3, the candle engulfed. This candle did not really engulf, so that number 3 rules is not there, or it doesn't have a fair value gap in it, right? And number 4, it is rejecting on a pseudo block. So what is that pseudo block here? We have a fair value gap here, or much more, we have a breaker here. We have a breaker block here. This particular block that I'm actually marking here, right? I'm still going to make a video on what a breaker block is, a mitigation block. All these things are ICT time, just like what I said, but there is a way that I've actually looked at it. I heard it from someone, and also I actually have to research through the market and see it in a way I actually best understood it and how that's actually worked for me for the past 3 years that I've been trading it. So market actually has this particular zone. This particular zone ought to be a bearish order block, right? Bearish order blocks is the last green candle before the downward movement, right? So this particular block ought to be held, but when price got there, price just broke through it. You can see it. This particular zone will now serve as another support, right, for the price that is coming back. So that is why I can actually use that as a pseudo block, and this price now moved away from that zone. So anytime price pull back to this zone, then we can actually be expecting that price might actually reject from this. So it's just wisdom for us to know how this actually works. So I've actually explained what a bullish order block is. I said it is a last down candle, last bearish candle before the upward movement, and that upward movement or the impulsive move must break market structure. So that candle can now engulf and also rejecting on another order blocks, just like the 4 rules I've actually stated here. All right, so what is a bearish order block? It is a last bearish candle, right? Last bullish candle before a downward movement. Now, we can have that particular zone taking out liquidity. It is actually very, very important. When I see something like that, I will be very, very happy with that. But anytime that did not happen, I'm just looking for another features, maybe reject on another order block, but it must break market structure. There's actually some candles that I've seen that doesn't break structure. I'm going to teach that also later, just like what I said, that this is going to be episode 1. We're going to see dimensions and different dimensions of blocks and how we can actually trade from them. So these are other blocks. This is a bearish order block. So let me just mark what other blocks is. We have other blocks everywhere. We have this kind of block everywhere. So it is now important for you to know where should you really trade from, because if you are just marking every block, as you can see, look at this one. When price got here, even though price actually bounced through it, right, as you can see, we have this little movement. If you go to 1 minute time frame, at least this should actually give you some kind of profit. From this low right to this high is about how many pips? That's about 85 pips. It still makes sense, because you can still make some money off this. As you can see, when price pull back to this zone, also we have a movement up. When price pull back to this, we have a movement up. But for you to now spot the one that will now hold price for a very long time, that all those one, that particular candle must actually be, you must spot that particular candle in the right way or in the right manner. And this is now where we got the idea of the order flow, right, or market structure. When the market structure is bearish, you are not looking for a bullish order block, because by looking for a bullish order block, it shows that you're actually going to counter trend, and at the end of the day, you'll be burnt out of the market. And when the market is bullish, you are not looking for a bearish order block. You are not looking to sell in a bullish market, and you are not looking to buy in a bearish market. This is a very, very important rule that you must make sure actually stick to your mind. And just like what I said, the best kind of a rule, right, of order blocks is the one that actually fulfill this. And if I can spot this and also is in line with the order flow or the market structure that we can actually see, then we should know that that particular block will really work out. Now, I don't really need to bore you with so many stories for you to actually identify this block. Now, you can just go back to history and just see how it works out. So this is actually the rule we're going to follow. So let's just see some example how we would have actually trade from it. So the first one I'm going to start with, right, we can see, right, market structure from a high. We have a higher high here. Let's forget about the fact that we have a price movement from here, even though this price has actually been bearish from this. But let's just start counting our structure from here. We have a higher high. Then let's see, this is actually an higher low. We have a lower high here because it's actually this particular zone failed to break this high. So this is a lower high. Then let's say this is a lower low because this low is lower than this, right? So price actually moved up to form a lower high. But look at this particular zone that actually formed a lower high. This zone actually took out liquidity. It is in line with the market structure. Market structure is bearish. Then we can see the candle that took out liquidity, and this particular candle now is rejecting on another order block here. Fantastic. This one is very, very important for you to spot, and you should know it will surely work out when you see such an opportunity in the market. Market structure is bearish, you see such a candle, then you should know you can actually trade from that. Not only that, this particular candle that took out liquidity and is also rejecting on the other blocks, let me just mark that. This particular candle here, look at what happened to it. It took out liquidity. This particular movement here took out liquidity. It has an impulsive move that break market structure. At least if you don't understand what an impulsive move, it just means that this candle at this movement is just having one singular candle all through, or one singular direction all through. There is no green candle whatsoever at the middle. So we can say this is an impulsive move. This is not an impulsive move because price is actually just compressing, right? By having so many the opposite candle, we have the green, we have the black, we have the green, we have the black. So that is not impulsive. But the way we actually spot momentum in the market is when market is just going one direction without actually giving maybe the opposite participant in the market an opportunity. So when this particular candle took out liquidity, reject on the block, a break market structure, this particular zone now becomes a zone of interest for us where we are looking to sell this market. So this particular zone now becomes our selling rejection zone. That is where we are going to sell from. Notice that the only rule that was not fulfilled in this is just rule number three. Rule number three. So we can still do away with this one, even though the rule number three is also important. But at the same time, we have three rules. By the time we have three rules, that shows it's actually a very good block. So by the time price is pulling back into this particular block, then we are willing to sell. Now, let's just have a replay and see how you would have actually sell this market. So price pull back to it. I will go to 10 minutes time frame. Just want to trade for 10 minutes time frame. Don't forget what we said, that before you trade, right, this is actually the pattern you're looking for. Price is pulling back in a compressed manner into your zone, right? By the time price get there, you want to see a high created, price break structure or took out liquidity, break down. When it break down, you want to see a retracement into that zone, then price breakdown, and you're going to put your pending order here, then your stop loss above this zone, then you can actually sell from there. So that is actually the idea we're actually looking out for. So this particular rule was fulfilled. Price was pulling back. By the time price actually got here, right, price was actually impulsive until this zone. Then price began to actually move in a very sluggish manner, right, pulling back in a very slow manner. So price actually got to this zone. Now we don't really have a significant liquidity graph from here, but no doubt we still have a 1 2 3. All right, 1 2 3 pattern. I'm going to teach that later on. All right, we have 1, right, 2, right, 3, we have 4, right, 3 8 pattern into that zone. Then price breakdown, we have a lower high, we have a lower low, as you can see here. So price actually showed us some kind of good movement from here. So our entry can be here, even though this is actually not a good way to enter because price did not really have a significant liquidity grab before that movement. But we can actually take our trade from here, Now, just like what I said, 1 to 3, 1 to 4, 1 to 5, 1 to 10. But I will always go for 1 to 10 as the case may be. So let's see, this particular trade has actually moved up. By the time price break this structure, I'm willing to actually break even to actually continue that trade. So let's continue and see what actually happened eventually. Right. Price eventually come back to take us out in break even, as you can see. So this trade is not valid any longer. So price break this high. By the time price break this high, this is a significant liquidity zone that we can now see on this trade. Now it is significant liquidity zone. Price took out this liquidity zone. Very, very important. As price took out that liquidity zone, then we are looking for price to break market structure for us to now trade from it. So fantastic. So look at how price actually break this particular area. We have this block beside these are also in the rejection zone that has an impulsive move. Don't forget, this particular rejection zone break this structure, but at the same time it is rejecting of this particular zone. So we have two zones that we can look to trade from. Number one, right, is this particular block here. Though I love trading from the extreme, but anyway, I would not just give this price a chance to just leave me out. So number two, I have another trade here. So I can go to maybe 3 minutes time frame just for me to refine this zone, for me to get a better view of this. So this is actually where I'm willing to sell this market from, and this one, maybe this particular zone. So if I go back to the 10 minutes time frame, I want to see price come back to this much more. This is actually the most important zone I'm looking out for, and this also fulfills the rules of market, other blocks. Price was compressing, which is actually a significant indication that price is actually very weak. That's a movement up, took out this candle as a liquidity grab. It has an impulsive move that breaks structure, then it has a fair value gap in it. Can you see this fair value gap, or it engulfed? So most likely this is actually the zone I'm expecting to trade from. This is the zone I'm expecting to trade from. You know, we are talking about other blocks, how you can also use market structure and other blocks to trade, because trust me, you will actually want to trade now when your 4 hour, you know, we're actually starting from 4 hour. 4 hour is showing bearish move. We have lower low, lower high, lower low, lower high, lower low, and we actually want to sell. But at the same time, on your lower time frame, you want to ensure that the market structure, when price eventually pull back, right, to this zone, right, you want to ensure that market structure is also bearish. Now we have price going lower low, lower high, higher high, higher low, higher high, higher low. This is actually lower time frame now. The bigger one I've drawn is actually higher time frame. So by the time price pull back here, taking out liquidity, you want to see break of market structure, then price should actually signify that it is now reversing. So this is actually the best way that you can actually trade this particular concept, as the case may be. So price, let's see where price will go back to. Then this one also, we can also refine that. So let's go on. Right. So price break through that. Actually did not get to our zone. It is actually very slow. Right. So this is what we have. Price actually did not come back to the zone we're actually willing to sell from. But let's see if there is going to be another opportunity for us to trade from this market. Let me just go to 4 hour just for us to hasten up this video. Right. So price actually did not come back to our zone, and the first zone that we are looking out for here would have actually been a loss. As you can see, this is actually the zone, but this actually did not actually give us a significant zone. So price did not come back to this. So we had one loss from here. But don't forget, we already took a trade here. You know, we are not looking for high reward. Now you would have actually taken maybe let's in this particular zone here, you would have taken about 1 to 2 here. If you are going for 1 to 5 easily, this would have actually given you 1 to 5. By the time price would have actually come to this zone, we are just topped out with just few pips in this area. But let's go back to that 3 minutes time frame. I want to confirm if this trade we're actually is going to stop us out. Right, this is where we want to trade from. We want to look for a good zone here, this particular zone here. Right, so let's see if it's actually more than 3 pips or so, then we might actually this 10 pip. Right, so this trade is actually a valid loss. Right, we took that loss from there. So this is just the idea that you can actually use to trade other blocks. We took one trade from there, but let's see if we can actually get another example that we can trade from. Now this is another one. Price is still very much bearish. As you can see, this particular candle actually gave us a spike. Right, that shows it took out liquidity. It has an impulsive move that break this structure, Then another thing is that this particular movement is rejecting of this particular zone, and not only that, of this particular block here. This is actually a structural zone, so it's rejecting of that. So we have all the 4 rules being met in that particular example. So this is actually a block that we can actually reckon with, right? This particular block, we can actually see this example as an opportunity for us to sell this market. You know, it's not just for selling. We can also find an opportunity for us to buy it, but this market is basically bearish. So I'm going to spot a bearish order block in a bearish market. So let's go maybe to 1 hour and I just adjust this particular pair, this particular block a bit, just for us to be precise. Then go back to 4 hour, then have a replay to show how we would have actually taken this trade. A replay. Let me start from here. Right. So 10 minutes time frame, that's where I really want to trade from. Right. Price got to that zone. Right. It has actually taken out liquidity, but let's see what actually happened. Let's see what happened. Right. So price eventually took out liquidity here. As you can see, we have a major liquidity zone that was taken here. Price took out this particular high. So we are now willing to continue to sell this market. So we have accumulation, manipulation. Then we want to see price actually break down. So this particular action, now price already gave us impulsive move. This is actually the beginning of that move. Then we have something like a breaker pattern here. A breaker pattern in this particular zone. This particular price action is beside this zone. So I am willing to sell this market of this particular area. Willing to sell this market of this particular area. So that's going to be my entry point and my stop loss. Right, my stop loss is here. Right, this is going to be my entry point, about 4.2 pip stop loss. So let's see what happened. What happened? Right, this ought to be right. This trade did not really get activated, but let's see. Right, so another one was formed here. Right, no. When this particular trade did not get activated, right, as that trade actually did not get activated, right, we have another one here. This particular movement actually went up to retest this particular breaker. I actually did not see that on time. It did not actually go end up to retest this particular breaker, but actually it's still beside this particular zone. So we have a movement down, though this is really not significant. But at the same time, we would have actually, let me see if I can still play back this just to explain that so well. Right, let me just do this and just explain that. Right, where is the zone we are looking at for? Right, so this particular zone, that's where we are looking out for. So let me just replay it. Right, 10 minutes time frame. Let's go to 1 minute time frame so that we can actually have, right, price pull back to that zone. So 10 minutes time frame. So this was when, let me just delete all this. You know, we already have an entry. By the time I'm going to see that, then I will really be expecting another thing to actually be formed. Right, so we want price to take out liquidity, and that actually happened. Right, that already happened. Price breakdown. So this is actually the first zone we are looking to trade from. Right, this is the first zone we are looking to trade from, but eventually price actually did not break this zone. That's actually what I actually omitted from here. So but we can still look at this zone as a zone that we want to sell from. Let's go on. Right, so that's 4.5. So this particular zone eventually break this zone and actually is beside the breaker. This particular block is rejecting on this breaker. So, and I can actually see my LC candle there, the last candle there. That's what we mean by LC. So I'm going to mark this particular zone as where I'm expecting price to pull back from, or to pull back to. This is actually going to be my second trade. So let's go to 3 minutes time frame just for us to see what is happening there. 3 minutes time frame, maybe 2 minutes time frame more, just for us to get it clear zone. So I am going to be willing to trade at the zone that has never been really tested, which is actually this particular zone. So I'm going to put my pending order there, and that is actually the zone I'll be willing to take a loss if price would eventually get to that upper zone that we've actually marked. All right, so let's go. Not that you should have multiple entries, but it's just you following the rules, just to follow the structure. As you can see, eventually price eventually break this low. So this actually makes sense for us to actually sell from here. As you can see what is really happening in this particular area here. So let's play and just see what will happen. Right, our trade was activated. Right, don't forget we're looking for 1 to 3, or you can just even set your TP at this particular zone. Right, or you can actually look forward to trade this particular low, or any rejection, any liquidity zone that you're actually looking out for. This is about 1 to 34 risk reward ratio. So if this trade actually stops us out, we know that the reward is actually more than the risk. It's actually going to make sense. So, and that trade was actually now going up and down. As you can see now, 4-hour time frame, this trade just continued to go down. So we can target this low, but this trade has already actually moved in a significant zone, right? And that 1 to 34 was actually met. So this is just for you to know how best you can actually trade. Now we can actually see another opportunities from here. You can see how price was rejecting this particular zone in a bearish market. This particular candle was actually rejecting on this, so it's actually a very good zone for us. It has an impulsive move that breaks structure. It broke this low and also this low, so, and it also rejecting on this particular zone. So we can actually have a trade there. Then we have another one here. We have higher high, we have lower low, right? We have lower high, we have lower low. So we have this particular block that has an impulsive move, but at the same time is rejecting on the block. So this is another zone that we can actually sell from. If you go to lower time frame, you would have actually picked a trade from there. Don't forget, in this kind of market, you are not looking to buy. As you can see, we still have a buying opportunity from here. Look at, if you are looking to buy from here, you should know that your zone will be broken, right? If you are looking to buy from here, your zone will be broken because market is still very much bearish. As you can see, market is still very much bearish. So you need to know when to mark your block and how to actually trade with the order flow, right? This is going to be the first series, and it's going to be the first episode that we're going to record based on institutional order flow, order blocks, and how to actually trade it perfectly, how to bring the structure of the higher time frame into the lower time frame for you to trade effectively. I hope you actually get value from this, right? If you get value from this and you actually learn so much, I want you to actually click, right, or you should smash the like button. And also, if you are yet to subscribe, just click on the subscribe button and click on the notification bell. Don't forget, join us on Telegram, join and follow us on Instagram. And just like what I said at the beginning of this video, I said I want to give I want to do a giveaway, and that giveaway is just to appreciate you guys and for you to buy data to much more study my work and also follow whatever else I'm doing. So I'm going to do a giveaway of a token, just a small amount of money, right? This is just the beginning. I've actually not done that before, so I want to use this to do a starter. So the next one, which might actually be when this particular channel is 10,000 subscribers, right? I'm going to give 2 lucky individuals a spot in my mentorship class so that you'll be able to study all my work and I'll be able to have one-on-one with you and actually training effectively. So that's going to come when we have 10,000 subscribers, and many more is actually still on their way. So what you need to do for this giveaway, right? For this giveaway of $100, it's just small, right? It's small, but at the same time, I believe that this just is a gift, right? So we are not really expecting to get rich with this, but at the same time, I believe that is actually going to help 1 or 2 people. So what I need you to do, number 1, I want you to like this video. Make sure you like this video, right? Number 2, right, I want you to hit on the subscribe button and click on the notification bell, subscribe, right? Number 3, right, I want you to give a comment, right, at the end of this at the comment section of this particular video. Give a comment with an hashtag. Give a comment, and that comment can be how this particular channel has been a blessing to you, how it has actually turned your trading career around, what much more things you've actually learned from me. So just give that particular comment with an hashtag liquidity, right? Let's say liquidity, right, with an hashtag liquidity. Then number 4, right, it's just 5 rules. Number 4, follow us on Instagram. Follow us on Instagram. You know, all this thing doesn't cost you anything. It doesn't cost you one penny, right? And number 5 join our Telegram page. Our Telegram link is on this description, is on the description box, and the Instagram page, you would have actually see it flying through your screen, so you can actually search through it and just join us. Follow us on Instagram and follow us or join our Telegram page. Right, so this is really what I want you to do, and the lucky winner is going to be announced next 2 weeks when I'm going to produce another video. So I'm going to do the raffle draw, or I mean the random. I'm going to select the winner randomly. I'm going to use a site called is it Comet Picker now. That's where I'm going to use, and that's the site I'm going to use to pick the lucky winner. So I'm not going to be able to determine that. It's going to be that particular random picker that's going to do that. So the winner would be announced, and this particular money would be sent to you. So you can follow us on Instagram, just like what I said. On our Instagram account is LPC_systems, right? Underscore systems. Or you can message me on Telegram. My own personal Telegram account is online trader 16, online trader 16, or at online trader 17. Right, or this is our mail. So you can also message me via mail. So this is really what I'm expecting you to do. Then you can, now these ones are not the task you have to do. I've already listed the tasks, those 5 tasks. That is what you have to do. But all this information is it's just for you. If you want to contact me, these are actually the avenue whereby you can use to contact me via mails, via Telegram, and also my Gmail account. So guys, if you actually gain value much more in this video, don't forget to subscribe, like this video, and I will see you in the next video.